Hey everyone, this is Bill. Welcome back to the channel. Everywhere I turn, there are folks, from fellow YouTubers to market analysts on CNBC, who are predicting a stock market crash. What if the stock market does crash? Are you prepared? I am, and I have a plan. Although I have a degree in economics, I'm not a licensed financial advisor, and I cannot advise you what to do. Everyone's situation is different, but I can tell you what I will do, and I will. So let's get to it. First, let's take a look at a chart of the S&P 500. We close the week on a strong note as the market continues to think a new round of stimulus is around the corner. Additionally, there appears to be continued advancement as companies race for a vaccine and/or effective therapeutic for coronavirus. The S&P sits approximately 3% below its 52-week high. Barring any major financial news one way or the other, odds favor continued upward overall movement. Should the stock market break lower, the next level of resistance would be around 3,200. And from there, we find strong support at about 29.75. If there is a catalyst which breaks the market sharply lower, I have a plan of action. I have identified 6 stocks I already own, 3 well-known leaders, and 3 what I call New America stocks that I plan to add shares to. As Warren Buffett once said, quote, "Whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down," unquote. Speaking of Warren Buffett, the first stock I'm adding shares of is Buffett's Berkshire Hathaway. I have been a decades-long shareholder of Berkshire Hathaway. Although Warren Buffett and his partner Charlie Munger are up there in age, the company is well positioned moving into the future. First, Berkshire owns many strong companies. Noteworthy among these are Benjamin Moore, Clayton Homes, Dairy Queen, and Geico. Additionally, Berkshire owns sizable positions in some fantastic stocks. I have highlighted 5 of them: Coca-Cola, which happens to be my largest holding, Costco, New Data IPO Snowflake, Apple, and Johnson & Johnson. Owning shares of Berkshire gives you exposure to these highly regarded companies and many more. Berkshire recently dumped large positions in the airlines, seemingly in part due to the impact coronavirus had on the industry, so the stock was slower than many to grow after the March downdraft. But as you can see in the chart, the stock has since recovered nicely and is in a position to make a move higher. Berkshire Hathaway is well diversified and in a great position, so I'll add shares. Being a real estate investor, I am always in Lowe's. So are millions of other customers. Since taking over Lowe's as CEO in mid-2018, Marvin Ellison has been doing a tremendous job, and it shows as gains in most aspects of the business are quite visible. Back in March, in the thick of the downdraft, I loaded up on Lowe's, and it has more than doubled since. When cashing out at checkout, it makes you feel better knowing you're a shareholder. A review of the company data shows the balance sheet is very strong, and the environment for their business, and that of rival Home Depot if you prefer, is rock solid. There's a nice dividend with Lowe's as well. Lowe's is a very strong stock and a steady and powerful uptrend. But if another crash comes our way, I will be throwing much of my dry powder at Lowe's. The impact of the coronavirus has really had a negative effect on the Walt Disney Company. The movie industry is pretty much on hold. The parks, which represent approximately 37% of the business, were closed throughout the spring, but while Walt Disney World has reopened with limited attendance, Disneyland in California remains closed. ESPN and ABC Sports have been hurt with limited live sports. However, thankfully for the company, with many folks at home, Disney Plus emerged and has been very successful. When America gets past this pandemic, the road to recovery will be bumpy, but Disney will be among those who greatly benefit as Americans rush back to the happiest place on earth. However, if we fall victim to another significant downdraft, I will be adding shares of Disney, as in my opinion, few options offering greater long-term value exist. Before we get on to my New America stocks, we would appreciate you liking the video and subscribing to our emerging page. Thank you. One of the industries ripe for disruption is banking, particularly on the retail side. Some 40% of Americans are underbanked, and the rest of us are treated poorly for being banked. Many are continuously hit with punitive fees, and getting things done is difficult. Enter Square, who is emerging in the industry, not only in the United States, but globally. Square gives a relationship between small business and the consumer empowerment. The digital wallet concept, including Square's innovative Cash App, is a strong one which will become the new norm. Noted investor Cathie Wood of ARK Invest stated recently in an interview with Anthony Pompliano that, quote, "the competitive advantage a company like Square has relative to banks is going to destroy banks, turning them into commoditized utilities," unquote. ARK Invest, which has Square as one of their largest holdings in most of their ETFs, projects significant stock appreciation for the company in the next several years. Therefore, while I continuously add to my current Square position on dips, should the market crash, I will be adding big time to Square, as in my opinion, they are most representative of the new America. Another futuristic stock I will grab additional shares of if we see a market crash is Tesla. Yes, the price-to-earnings ratio is extended well beyond historical norms, but this company is on the brink of several life-changing advancements indicating the stock may be undervalued. The electric cars are gaining traction, but autonomous vehicles and the emerging disruption of the utility industry, with Tesla's advances in solar and battery power, is beyond intriguing. CEO Elon Musk recently stated that at Tesla they, quote, recognize the true problem is building the machine that builds the machine, unquote. Tesla is working to solve this problem. Can you imagine? Famed investor Chamath Plihapitiya of Social Capital recently had this exchange with Andrew Ross Sorkin on CNBC Squawk Box.
A couple of stocks that you have been following and been a fan of for quite some time, and some interesting trends in terms of big tech. Where do you stand right now on Tesla? We've talked about Tesla for a very long time, and they've had a lot of success this year in particular. But there's also a number of competitors that are really, I think, finally about to come online, and I don't know what you think that means competitively.
To be really honest, I don't think it means anything. You and I had a wonderful discussion this summer, and my perspective then, and it is the same today, is that Tesla is no longer about the car business. The value of this business is about deregulating energy, and so that's about batteries and battery storage, and it's about disrupting utilities. It is about the combination of hardware and software that will give all of us individuals the ability to be energy independent. And I think that is a fundamentally disruptive thing. And people continue to misunderstand and underestimate this business. For example, if you went into Tesla Battery Day, if you looked at sort of all of the commentary, the traditional pattern recognition feedback was that it was a dud event. And I think it was a complete opposite, because what they showed was a legitimate path where, not just for car businesses and for selling cars, but frankly for individuals, and the disruption of utilities is now, I think, within 2 to 3 years away. And again, as I told you, what we are talking about there is hundreds of billions of dollars of both market cap, debt, all these instruments that have supported a business model that I think is now very much at risk. And so from my perspective, I think Tesla continues to be underestimated. I think it is generally misvalued. And I think that the people that are trying to compete with them are not the people that they are competing with. They've sort of moved on. And in that, I think, is sort of the destruction of a lot of traditional market cap in the autos, because I just think that ship has fundamentally sailed.
With these advancements on deck, Tesla stock is poised for rapid price appreciation. The various things Tesla is working on boggles the mind and will dramatically impact the way we live our lives moving forward. I currently seek accumulation of Tesla on dips, but should a crash occur, I will be aggressively adding shares. Amazon is changing the world. They have completely disrupted retail. Amazon owns delivery, fulfillment, and logistics, and sits strongly in the cloud. Amazon is engaged in self-driving cars, has a strong presence in healthcare, and is a leader in artificial intelligence. Biometric payments and home enhancements inclusive of AI-powered home robotics are on the horizon. Hi, Alexa. In a recent discussion on CNBC's Halftime Report with Scott Wapner, Josh Brown, CEO of Reholtz Wealth Management, had some insightful comments on Amazon.
Josh Brown, 4,500. Amazon.
Wow.
Well, Amazon is up 500% in the last 5 years, 1,800% in the last 10 years, and those probably seemed equally unlikely if you would have told people, went back in time and told people that's what would happen. Amazon's the most powerful corporation in the history of the United States. Way more powerful than Standard Oil ever was, or ExxonMobil, or U.S. Steel, or any dominant. And in fact, they're so powerful, this might be the only publicly traded corporation in America that is deliberately holding itself back from growing so that they don't end up in 5 different antitrust suits in Washington. There's no reason why we don't all buy our cars on Amazon other than they don't want to get sued. There's no reason why we don't buy life insurance. We don't keep bank accounts there. They could sell houses. Amazon literally has to restrain itself. That's how incredibly powerful and what a great how great they are at execution. So I can't think of another company that's publicly traded that's like actively pulling the reins back on itself and constraining itself so as to stay out of court. And for as long as they're in this position, I really don't know why you'd want to be betting against them.
Yeah, no, I hear you. It's just, expecting that kind of upside is still spectacular. All right, good stuff.
Do you know they're not even doing buybacks yet? Do you know, like people like, oh, the only reason stocks went up is the buyback. Okay, tough guy. Explain Amazon. They're not buying back stock. They don't even pay a dividend. There is so much power and flexibility concentrated at that organization that I don't even think they've pulled half the levers that they could pull. So that's the way I think about it. And 4,500 doesn't seem that unreasonable in that context.
Amazon is expensive, but keeping in mind Josh Brown's reasonably accurate commentary, I view Amazon as a must-own stock. Amazon has been at the forefront of disruption and changing the world, and that is an arena I want to be invested in. So, at any significant weakness, I am adding shares of Amazon to the portfolio. So there you have it, my 6 stocks I'm adding if the market tanks. Leave a comment with any stocks you might be adding. I hope you enjoyed the presentation, and if so, please like the video and subscribe to our new page. Thank you for watching.